Hello, trading is closed on the 19th of April 2016. Yesterday we had a few calls. One was a gap outside of the day's range, and that happened. We had a number of MEJT targets. There's a standard rule: a strong gap in the undesired direction kills the call before the open, so these were killed before the open. The optional target 2083.60 time has run out, but this 2085.21 target has not run out yet. Expiration comes close to an hour after the market opens tomorrow. So we have a new target for tomorrow of 2095.38 before the end of the day, but perhaps more importantly is 2085.21 early on. This same number is a support level based on a totally different methodology in somebody else's work. So if we do have a quick drop there in the first hour tomorrow, that's a price I'd look for some support. Well, during the day, MEJT said ultimately higher prices would print. They did. It said this move is false, and that's where we get the target of 2095.38. This price printed yesterday. Well, perhaps most importantly of all, this is a target I've been waiting for since December 2, 2101.01. The target was hit. There was resistance over it, and the target was retested once again. These highs were like 2101.05, 2101.07. This is a MEJT resistance area. The ideal situation for tomorrow is a drop right from the open and these prices printing. There's nothing in the system requiring this price to hold, but if it holds, it tends to lead to a pretty big move in the other direction. Let's take a longer term view. We have 5 MEJT targets on the recent rally which haven't printed. 6, 7, 8, 9 MEJT targets. What are the odds these things are going to print? Or is the whole system going to fall apart? Well, these are all of the failed targets from September 2013, which is off the chart here, to January 2016. We had one day in 2015 and 2 adjoining days in 2014. Let me see if I can shrink this. September is right about here. So from here to here, those are all the failed targets. One cluster in 2014, one cluster in 2015. We now have 9 targets here. I think they're going to fill. As a general rule, having a strong rally inside of a consolidation tends not to lead to a breakout of the consolidation. You'd rather meander around, come to the high of the consolidation, and then break through. Let's look at some DeMark stuff. This is the daily chart. Here was your combo sell. Here's your sequential sell. The stop loss is to be interpreted loosely, but it's right at today's close. That's the daily. Here's the weekly chart. Here was your TDST line, 2103.11. We broke through and came back. The TDST line is a support resistance area. We had some TDST lines right over here. Support resistance goes to one par past the line. So you'll notice when we hit these lines, we had a strong rally. We're hitting the line now. I think within a bar, it should hold and give us a big drop. Let's look at the monthly chart. Well, here was, now this is going back years. This goes back to 2009. Here was a sell signal here, bar 13. We got a pretty good drop. Here we had a recycle, and here we finally had a sell signal almost 1 year ago. Well, we haven't gotten too much out of it. We got something here that counts. But what about the significance of today's high? You'll see how few TDST lines there are. Each one takes over a year to be created. And if you go to today's high, and you line it up with the first TDST line, you'll see how the 14.6% and the 38.2% are direct hits. It's a beautiful pattern showing how a pattern extending years targets this price, and when a pattern takes years to form, it can take years to undo. Obviously, if we break through, the whole thing falls apart. So this is a make or break time. I'm looking for us to move down, starting early tomorrow, and possibly pretty sharply. If it works, it could be very rewarding. But if we gap up, take out these highs and hold on to them, a lot of the rationale falls apart. And that's today's call.